Today's market call is presented by Robinhood. Robinhood's financial tools put you in control to trade, invest, and earn your way. 1 o'clock on the East Coast, Tuesday, November 5th. Guy Adami, Dan, Nathan, special market call. Every day is special. Dan, how are you?
I'm doing great, Guy. You were missed on the market call yesterday. We didn't even dox you. Again, we didn't know where you were, so there was nothing to kind of give up. But I hope you had a great long weekend, Guy. We're back, baby. There's a lot going on in the market.
There's a lot going on. I will tell you where I was in case anybody is interested. I was in Quebec City. I actually posted a picture of Montgomery Falls, and some people actually knew where it was. Fascinating couple days in Canada. We enjoyed ourselves, but we're back. And to your point, there is a lot going on here. I mean, you know, the market is on the move without question. Obviously, there are a lot of things yet to be determined today, but we have an exciting market day without question here, Dan.
Yeah, it's funny, Guy, you know, and we play this game every once in a while. If you told me the news today, would I be able to guess what the market's doing? Tomorrow, you know, I wake up like you wake up, I start reading about, you know, what's going on overnight, where the futures are, you know, kind of refreshing myself on economic data, and maybe what's going on the earnings front. And, you know, one of the first headlines I read is, you know, S&P futures up slightly, you know what I mean, in front of the election. And if you just look today, I mean, I had a meeting, okay, and I got back to the office at like 10:15 or something, or maybe 10:30. Look at this move. Maybe Amanda can pull up an intraday chart in the S&P 500, man. I mean, something happened in the cash or in the futures, just looking at 5750 here. You know, it was this like parabolic move. I don't know. Did you see any headlines? Did you see any tape bombs that would have caused that?
I did not. You know, I saw some headlines about, you know, lines at different pollings in different states, but, you know, I can't listen. I've only be guessing if I tried to attribute today's move as to what I'm reading, but, you know, that's what makes this thing so interesting. But let's take a look at our rundown, because we definitely have a lot to talk about here. Election in the Fed, Vol-palooza. Well, I will tell you, even though Vol is down today, you still have a VIX north of 20, which suggests you're going to still in for some moves to the upside and the downside. And how to calculate an implied move, I think that's going to be really interesting for the audience to learn. You do it better than anybody. We have an options trade in Google that you're going to outline. And if we have some time, Dan, a little audience Q&A.
Yeah. So by the way, on that rundown, there's a question mark, Guy, after the Volapalooza, right? If you think about it. Yeah, you know, because again, you know, you would think that the election and the Fed, you know, if they don't have to go, the reaction in the markets, they don't have to go the same way, which you might get a little whipsaw action one way or another. Let's just talk for a second here. You know, I think, you know, you and I, you know, we don't have a crystal ball. I don't think anyone does. And when you think about the market action, you know, you can give me your 2 cents on why you think, you know, we had this kind of rip higher early this morning. You know, obviously the polls got open then, and we're not going to know any real data. I think there's probably two very likely scenarios by the end of the week as it relates to the election. I think one of them, and you can tell me if you think I'm wrong, one of them is that Harris wins and they basically give up the Senate. They lose the Senate, and they obviously don't have the House. So in that scenario, you have a divided government. Another scenario is that Trump wins, and then you have the Senate, which is very favorable for the Republicans to take, and they already have a narrow lead in the House. And so you have basically a Republican sweep. Now, it's my understanding, you know, based on you and I've been in the markets for a while, is that investors generally like divided government. And so you tell me, and I'm not making you know, a prediction or anything like that. Do those two scenarios seem possibly like the most likely to you?
Yeah, plausible. I mean, you know, plausible. I think the ones you just outlined, if you're looking at it through that crystal ball or that lens, I mean, those are the two most plausible, I guess. But, you know, you could spend an entire week or weekend reading about this election, and I think you'd walk away with your head spinning in terms of, you know, the different prognostications. I think that Iowa poll threw a monkey wrench in the entire thing. You know, that I think took people a bit off guard. I think that had people reevaluating some of the metrics and some of the numbers they use. But the reality of the situation is, you know, that's all we're doing right here is spitballing. So I think you're right in terms of your assertion that the markets will like divided government regardless of how that's constructed.
Yeah, and again, we've seen midterm elections, since 2016 when Trump won. That again, they kind of outperformed. Dems outperformed in both of them. Obviously, they did well in 2020, and I think a lot of folks, think back to 2016. There are curveballs that happen in this sort of stuff. No one has the answer key. We'll see. I guess I bring that up because we heard for like the last month, as Trump built this sort of lead in certain polls, that the Trump trades, right? Those sorts of things. And so maybe those are a bit exhausted. I actually think there's a really good likelihood, no matter who wins, that the market continues to go higher into year end. And, maybe in the face of yields that have gone higher. I know you're in the higher yields camp. Do you want to, before we kind of get to the stock market and what it's pricing between now and the end of the week, do you want to look at yields and then maybe what you're expecting a little bit?
Yeah, I think we should definitely throw that up, and we could look at it. We have some great charts here. So this is, if you look at the 10-year yields, I mean, this has been a story now since the Fed announced a 50 basis point cut. And we'll obviously have a Fed meeting this week as well, which is a bit of an afterthought, which is fascinating because we usually spend the majority of our time speaking about that. But the fact that yields have gone, either side of about 434 here in 10-year, up from, I want to say, maybe 358 at its trough. I mean, I think it's pretty fascinating. And to your point, I think it's pricing in a number of different things. And quite honestly, I think regardless of outcome, and this is just my opinion, I think you're going to see yields continue to go higher. Then maybe you'll see this back and fill to the 150-day moving average, which we've seen before. And that makes sense. You saw a little pullback in yields late last week, but it feels as though the trajectory is higher. Right now, the broader market does not seem to care about that for a myriad of different reasons. I think the main reason is the market is interpreting that as a stronger economy, which is why yields are higher. And that might very well be the case. But I do think at a certain point, the market's going to start to care. And I think we're pretty close to that happening.
Well, and that's an interesting take too, because if we get to Thursday in the Fed meeting, I think they come out at like 2, and let's just say there is some clear sense of how this election went, then yields do become a huge factor, right? We've talked about how the dollar's moved up in front of that, and really what the commentary is out of the Fed. No matter what happens with the election, Fed Chair Powell is going to get a lot of questions about it. Like, there's no doubt about it. And, again, they've set themselves on a rate cutting course, but despite what we've seen in yields relative to interest rates and the way that they've spoken about it, you just mentioned the broad market. Let's look at the SPY, the S&P 500 ETF there.
Mm-hmm.
And this one is interesting to me, guys. So we often talk about why are implied moves interesting, right? Well, it really gives a sense for what market makers, what sort of risks they see priced in the markets or in individual securities. We talk about it all the time as far as, individual names in earnings events. But on a week like this, where you have the potential for two big movers, it is interesting to see what we're pricing here. Maybe Amanda can pull up my chart. Well, look at her screen really quickly here. So if we look at the money straddle, okay, so what is that? That's the call premium and the put premium in the weekly. Let's pull up my screen so you guys can see what I'm looking at here, and we'll go back to Amanda's here in a second. So here's my main page. I have a bunch of watch lists. You see the chart in the middle. I can just click on the SPY here, guy. Like, I'm just going to show you this. I can click on NVIDIA, and it brings me to NVIDIA and all the different things. So I'm going to click on the SPY here. I'm going to go to a big chart. Now, here's the other day. We had Carter on yesterday, and we're looking at the SPY chart. We're drawing a bunch of like uptrends. This is I'll just pull it to a 1 year here, and you see it. We know what this chart looks like. It's bottom left, upper right here, and it almost looked like it was going to kind of make a move back to that intermediate uptrend. It kind of broken through the longer term one. And now it looks like, it wants to fill in that gap from last week or so. So this is a tough one heading into the election. So what do I want to do here? I'm going to go look at the options chain in the SPY. I want to go to the weekly. That would be Friday. And I can click here. There's a lot of dailies, obviously. But here's the option chain for the weekly. That's November 8th. Here we do. We have a stock trading. Let's call it 576. So I'm going to go to the 576 strike here. Okay, and I'm going to look at the call premium, that's 672, and I'm going to look at the put premium, that's about $6 here. Let's call this 13, okay, just so we can, use nice round numbers, okay? So this ticket has basically populated an at-the-money straddle. So if I were to buy that straddle, I'm basically betting on volatility between now and Friday's close. I would need a move of either $13 higher or $13 lower. So now let's go back to Amanda's chart that kind of outlined those sorts of ranges here. And I would say that I need to move back to 589, okay, which is very near the all-time highs of last week or a week and a half ago, or a move down to 563. That's if you bought the straddle and you wanted to make money, 2.2%. The flip side of that is if you just wanted to make a directional bet between now and Friday's close by defining your risk. Well, you could buy that call premium. Let's just call it $6.50 at the money call. That's 1.1% or so, you know what I mean, that you would need to clear to the upside and to the downside. Let's just say you're looking to make an outright bearish bet or you're looking to protect a portfolio. You could pay about $6.50 ish, right, for that downside put. And then that gives you that exposure, you know, between with 576, you just do the math there. It's like 569 and a half, and you make money below that. Thoughts on the range there and the way we've kind of shown it on the chart, Guy, relative to what you're expecting this week?
So, I mean, I'm surprised, number one, that it's actually not implying a larger move by the end of the week. But again, you know, I understand what we're looking at. I think in terms of the ranges, it makes a little bit of sense. I mean, you look at the chart and you can see you have a pretty well-defined range that we've been in for the last, I don't know, few weeks or so inside that range. So you're betting for an outcome. But what this bet basically is a bet on volatility. And what's really interesting on this Robinhood chart, and I think this is worth noting, you know, you look at the bottom of the screen, Dan, and those bars that you see, those are, is my sense, are volume bars for those days. And you'll notice that on the down days is the days you have the most volume. And as the market starts to grind higher, what you're seeing is fewer and fewer high volume days. So to me, what that speaks to is you're setting up for something and you're setting up for a volatility event. That's the way I interpret this. So playing this straddle makes the most sense in terms of playing for that volatility, because to your point, you're getting both the upside and the downside.
Yeah, I want to go back to the Fed expectations too, guys. So we didn't have a meeting in October. We had that meeting, I think it was like September 18th. Is that right? And, you know, expectations, you know, for about a month before was that the Fed was going to cut 25 basis points, right? And then in the days leading up to that, and there was some trepidation about some weaker, you know, economic data. Some people were calling for 75 basis point cuts. They kind of settled in the middle at 50. Let's pull up the CME Fed Funds tracker here. And there's a near certainty that on November 7th, okay, in a couple of days, they cut 25 basis points. Let's look at December too, okay? So if you're looking at Dece now, and it's like a pretty high probability that you get another 25 basis point cut. So that would be, you know, 1% in a matter of what, 3-4 months or so. And so do you think that that is supportive of equity valuations? And I think you just mentioned something really important, that when we were much lower in the S&P, you know, a year ago, 6-9 months ago, that sort of thing, we're seeing much bigger volume days than we've seen of late. So is that telling you that investors are kind of less enthusiastic about the market, despite, you know, just being at all-time highs about a week and a half ago?
That's what it says to me. And again, I'm not suggesting I'm right, but my interpretation, if Amanda wants to throw that chart back up just so you can visually see, I mean, you know, you see those big spikes in volumes, and they are associated with or on the back of pretty significant moves to the downside. And, you know, the market doesn't seem, at least through the lens of volume, Dan, to be all that excited on the up days, right? I mean, the more stark the moves to the upside, the less volume we've basically seen. And that's been taking place, I want to say, since that August 5th day. So moves to the downside, volume seems to be on the higher side of the range. Moves to the upside, you seem to be grinding to the lower end of the range, which to me means we're setting up for something this week with the VIX still north of 20. So you're just trying to read all these tea leaves and figure it out. The 150-day moving average to me still makes a lot of sense. That's obviously where we traded down to back in early August. Yeah, we got through it a little bit, but you understand what I'm saying. And, you know, we're at a week where, you know, volatility still seems to be, people are still paying up for vol in an environment where the market seemingly wants just to grind higher. So, you know, I'm trying to sort of read the tea leaves here and come up with a scenario, and that's the scenario that I'm coming up with.
Yeah, it makes sense. I mean, again, we got to get by tomorrow and see what, if there's any kind of sort of definitive sense for how the election, and then we can start focusing on the Fed. Let's look at some individual names. These are the sorts of situations that people like to, again, game things out. This is back to, some folks, and you and I mentioned this all year long. I mean, despite the fact that, inflation's down, again, we don't have to talk about the cumulative level, but it's down from 9% to below 3%. We have an unemployment that's moved up from 3.5% to 4.1%, but 4.1% is still very near 50-year lows. We have growth, GDP growth that was 3% in Q2. It's about 2.8% in Q3. I think that's far better than a lot of people thought it might be at this stage of the game, especially with interest rates, that were higher for longer. Now they've obviously come in a bit. So when you look at that and you throw the stock market in there, very near all-time highs, you say to yourself, why would Biden's approval rating on the economy be so horrible? And you and I have talked about this, and I'd love to hear where you stand now. I mean, there are two separate economies as it relates to the consumer. And I think that's probably a big piece of the sentiment towards the economy and how the current president was rating on it.
Yeah, I think it's just that simple. I mean, whether inflation is trending the right way, which it clearly has been in terms of the arc, right? In terms of the speed with which it's going higher, it's moving in the right direction. But it's a cumulative effect that's pissing people off. And I think that's the reason why the approval rating of this administration through the lens of the economy is as poor as it is, because people are just paying more for things. And, whether true or not, I mean, for most people, it's absolutely true, and they're hurting, and that's how it's manifesting itself. So it just goes to show, and we talk about this all the time, we talk about the economy and the stock market being two entirely different things, and sometimes that doesn't resonate, but I don't think it could be any more clear in terms of the difference between the stock market and the economy right now.
Yeah, so let's look at a couple names here. Tesla sticks out to me, and maybe Amanda can pull that up really quickly here. And I'm just looking at the performance of the Mag 7 guy. I have Apple up 0.5% today. I have Nvidia up like nearly 3%. Microsoft's up 1%. Google's up less than 1%. Amazon's up nearly 2%. Meta's up 2%, and then Tesla again sticking out to me like a sore thumb. Up 5% on the day. So let's just kind of just discuss what's going on with Tesla. They had that earnings report. Maybe Amanda can pull up the chart. We had that earnings report a couple weeks ago, huge gap. It looked like over the last, week or so, let's kind of tighten that up a little bit. It looked like it was kind of filling in that gap. We know that Elon Musk, the CEO of the company, has been campaigning with Trump. We also know, which is interesting, I don't know if you saw this headline, and I know she's going to be on Fast Money with us later today, but Kathy Wood, who runs the ARK ETF, the innovation ETF, Tesla is one of their largest holdings. She, for the last 6 days, has been selling stock. And the idea was if Trump were to win, that Musk going to take some sort of job in the administration. And if you've been long for a while, that might kind of give you, a little pause here. Thoughts on that? Because today's price action, clearly is suggesting something like that people think it's going to be a benefit to Tesla, although she has a differing sort of view.
Yeah. All right. So let's widen it out because you wanted to show that gap. But, this is sort of the view that I had about Tesla. I want to be crystal clear. And even if you go a little farther out of menu, you can see, I didn't think the setup was particularly good into earnings. But when they reported that day, what I said was, it feels as though given this earnings release and given the fact that, maybe margins are starting to trend back the other way for Tesla, there's a really good chance the stock traded back up to about 263 or so, which if we were to draw a horizontal line across some of those tops, makes a lot of sense. And that's pretty much what happened. I actually think we probably overshot to about 270 or thereabouts. And if you look at what the stock did subsequent to that, I think we actually traded down to about 242 or so late last week. So what is the market saying today? Well, I think it's pricing in a couple different things, but now you're trying to game out whether Elon Musk leaving Tesla, if he were to be forced to leave Tesla for a job in administration, is a good thing for the company or the bad thing. And quite frankly, I think I can make an argument either way. I think a good thing would be, if this had happened 5, 6, 7 years ago, maybe not so much because Tesla was still reliant. A good thing now, maybe, because if they were to bring in an operator that may be more focused on the one specific business, that might be a benefit for Tesla. So I think people are trying to figure that out right now, and that's where we are. But again, the range in this stock to me has been extraordinarily well defined. And as I look at it here, either side of sort of 253-ish, I think we're sort of at the upper end of the range, regardless of outcome of this election.
That's a great point that you just made. Let's say 5 years ago, Elon was to leave this company. We know that there's a huge premium baked into that, for him. But let's just say hypothetically, let's just say he took some job in the administration. Now, he's not going to do that because SpaceX is very important to him. X and XAI are very important to him. He's got a couple other, businesses that he's focused on a little bit. But let's just say hypothetically, he goes, let's say he goes to SpaceX. Let's say he's done with EVs and he wants to go to Mars. You know what I mean? And that's a business that's humming along. If they were to bring an operator in like a Tim Cook, I'm not saying Tim Cook, but think back to, when Steve Jobs, who was a brilliant sort of operator, founder, visionary, the same way Elon was. Look at what's happened since, since Tim Cook's taken over. Now, maybe that was probably going to happen anyway, if you think about it, the life cycle where iPhones were and the like. But your point's a great one. And then hypothetically, let's just say he's like a shadow president in there. There's going to be a lot of favorable treatment towards Tesla. You know what I mean? So again, I don't think either one of us think that's going to happen. But I want to go one place else before we get to Google. One of the focuses has been over the last 5 years is just DOJ, FTC looking at these mega cap tech companies. A lot of it started during the Trump administration. He was kind of pissed at the way Facebook and Twitter and some of those things were happening, and there was it was, I think on both sides, a lot of people were kind of not happy with how these companies operated. And so, he was, he was pretty aggressive about those companies. Now, in the last 4 years, they've had this woman running the FTC, Lena Khan, who's just kind of leaned in on every which way to these major companies. And I think no matter who wins, I think she's out. I think they probably overstepped many of their bounds, when that sort of thing. What do you think happens? You know what I mean? Like, is this going to be the sort of thing? A lot of these major companies, they backed off an M&A. They're, you know what I mean? They're kind of worried about everything. It's been a handful of years that's happened. A lot of people think that it's quelching innovation.
Yeah, and I think your point is well taken. I think again, regardless of outcome, I think there's going to be probably a new person in that seat, which theoretically should be good. Theoretically should be good for M&A and those types of things. I would think more so under a Trump administration, but not to suggest it wouldn't happen under a Harris administration. So we'll see. In terms of Google, though, specifically, yeah, there's been a giant bullseye on their back. And I think one of the reasons they trade at a sort of a trough valuation to some of their peers, number one, and to the market, number two, is because of that exactly. So I think what you're going to see is, my instinct is, regardless of outcome for Google, and this is might not seem that intuitive, but regardless of outcome, I think Google could actually rally in this environment.
Well, I do too. And, you and I were sitting on the desk at Fast Money as that quarter came out, and we were like, this looks pretty good. I mean, like for all intents and purposes, especially after a couple disappointments over the last year, a disappointment of some of their kind of rollouts of, their Gemini and Bard before that. This is their Gen AI products, but it seems like they're starting to get the benefit of some of that technology working across their platforms as it relates to their advertising businesses. We know that one of the biggest issues is it going to cannibalize the blue link searches? That's how they make most of their money. So this one's interesting to me because I said on the desk, if this thing were to pull back and fill in that gap, so Amanda, let me run this legend here. And by the way, Guy, we're going to have a lot of fun with that legend name. I mean, maybe every other week, you and we call each other legend, like who made the best trades or something like that. But okay. So let's look at this thing for a second here. Let me just go to Google for a second. Okay. So this chart, shorter term, you kind of see that move, that gap. It closed on the low that day. It made a move lower, so it had 4 essential down days. Well, here it is. It's trying to find a little bit of support on that 150-day. Let me kind of blow it up to here's a 1 year, and you see that 150 days. So this thing was lagging many of its peers. You just mentioned the valuation versus, let's say, some of the other ones. Why is this one, in your opinion, today not rallying? Is it that we're going to have some sort of STC, some sort of remedy suggested in the next month, 2, or something like that? Is that one of the things that's kind of holding this thing back right here?
I believe so. I also think it's probably just in terms of investment dollars going into certain things and going out of certain things. So I think it's an allocation trade today as well, is my sense. But, what's interesting about this, and this sort of not contradicts, but this is counter to the broader market, where you're seeing the big volume days specifically in Google are the up days. I mean, you can go back and look at the big spikes higher. That's when you see the most volume. So, the down days, it doesn't seem like people are all that interested. It's when they say something or something happens on the positive side of the ledger that people get excited. So, I thought this stock could trade up to 191 or so, which was the high we saw back in July. It didn't get there. I think it got to about 186 or thereabouts. But the fact that we've back and filled, to your point, filled in that gap that was created on the earnings release, holding the 150-day moving average, which, by the way, is trending the right way, flattening out a little bit, but still sloping upwards, at least to me suggests, especially on the smaller down volume days, that there's another leg higher in this thing, Dan.
Yeah, and so I want to set up, get long exposure to this thing. I want to do it with defined risk. One of the reasons why is that, again, we don't know when some of the remedies are going to be proposed. That could be the thing that's been holding the stock back. And listen, who knows how it could go? It could be one of those things where it's not as bad as folks expect, and maybe the stock moves higher and it starts getting back to your 190 level. But let's just say it's something that feels really not particularly shareholder friendly. That's the sort of thing where you're not going to want to actually have unlimited risk. I don't mean unlimited risk, but owning the stock, in my opinion, especially if you're like near term and you're just looking to play for a trade. So let's go into the options trade chain for a second here. So I want to look out maybe to December expiration, Guy.
Mm-hmm.
And so let me just kind of pull this up while we're talking here. So December 20th, that is the third Friday of the month. That's the December regular expiration. So the stock is trading at 170, let's call it. Okay. So if I were to look at a near the money, okay, so this is like the way that their chains work right here on Legend, which I think is pretty cool. You see where the stock's trading right now. You see that I have probably 20 plus strikes here in this expiry. And let's just say I want to look at the 170. So you see my cursor here. If I were to buy that call for $6.80, I need to move to 176.80 to make money to the upside there. And I obviously have a good bit of risk there. It's the 3.5% or so. Is the way I'm eyeballing it, Guy, if you think about it. So that's not bad looking at December expiration. Here we are in the first week of November. But let's say I want to do a call spread. Okay. So let's look at the 170 strike. Let's call that. It's like 655. That's what it is. So I can see that if I populate that in a ticket. So that's 655. And let's say I want to look up. You just gave me the 190 sort of level here. Now, I could look at this call strike and I could say 190 and I could get, let's call it 79 cents, 78 cents or so. That's reducing. It's not reducing the spread by a whole heck of a lot or reducing the premium of that 170 at the money. Might I look to the 185? Well, that's $1.40. And let's just kind of look at that. So if I was going to sell that. So the way this ticket's populated, I'm buying one of the 170 calls for about 650 and I'm selling one of the 185 calls at 140. So if you can do that math, it's about $5.10.
$5, yeah.
Yeah. So let's just call it $5. Okay. So my break even if I bought this spread is 175. I have losses of up to $5, between 175 and 170, a max loss of $5 below 170. And then I have, gains up to 185. So risking 5 to make 10 on the, occasion that this thing is at 150. That's not a great risk reward, Guy. The way I'm thinking about it. So thoughts on, buying an outright call versus buying the call spread. And the last thing I'll just say is, like, we use a mental stop, whether we're buying a call or buying a put or buying a put spread or buying a call spread, of about 50% of the premium that we spent. We don't want to see these things go to zero. That's not great for your portfolio. So thoughts if I were to set it up that way with a call spread out in December?
So the call spread, so it's fascinating. And, you try to be formulaic about these things. I think a lot of people do. And what you come to realize is you really can't be formulaic because each situation requires a different set of eyes and I think a different set of trade structure. So this one, unfortunately, in terms of, you'd really like to get paid to sell the 190s or the 195s because that was sort of the prior high, but you're not getting paid enough to sort of put that side of the equation on. It's not offsetting the cost of buying the call enough, in my opinion, to sort of make it sense. So you roll it down to a 185-ish where at least you're getting some premium, but you're giving away too much upside, right? That's what you're struggling with. By lowering my strike on the sale, am I giving away too much upside? And my short answer would be yes. I mean, as much as I like a call spread, and I think it makes a lot of sense, again, because, you offset some of the cost of buying the call, I think you're giving away too much upside here. So I'm much more inclined to say, you know what? I think Google's back and filled. It sets up nicely. We know what the earnings release was. We may get the election out of the way. We should theoretically get it out of the way in time for the November strike. I think, instead of just selling those 185s or the 190s, it's just an outright call situation, which you're making a directional bet. But that's just me, and that's how I interpret the entire thing.
So let's, I went back to the chart for a second. So, Guy, the day that it gapped higher, I think it opened at 180 post earnings, and it closed. If you just kind of look, so I look at the left tick, that's the opening, and then the range, down on the right side, that's where the close was. So it basically got as high as 181. It closed at I want to say 170. 476. Here we are now trading, at 170. I might actually, so let me go back to the options chain. Okay. So I might look, maybe December's too long, right? And so I might look, out just a couple weeks here. So let's look at this November 22nd expiration. And I'm going to go down, I'm going to look at the 170. That's the at the money. So if I were to buy that, that's 4.25. And then let's look at the kind of 180 strike here down here at 82. Well, this structure now, it's, at the money, it's, $10 wide, and I'm basically paying a third of the width. That's not bad. And here's one last thing I'll just say is when I look at these, the 180 call strike that I would be selling here, let's go look at the delta. Okay. So the delta, you see where my cursor is, and I go all the way down here. The delta on this is about 19 or so. So what does that mean? It means it's got a 19% probability that 180 strike call is going to be in the money. Now, you might say, well, that's not a very high probability, but I'm selling that. I'm not buying that, right? So I'd never buy a call that would look like a lottery ticket. So that might be a trade that I would consider. And then I just want to, here, let me just click out of this for 1 second, Guy. So what if I went to the 175? That cost about 206, right? And then I looked at the 185. Okay. So maybe I sell that. Now I have a $1.74, $10 wide, but I need this stock now to go to 176.74 to make money, right? But my payout looks better. So the further out of the money you go, you have a scenario where the probabilities decrease. So I'm just kind of teasing those out where less time to expiration, maybe further out of the money, but a better payout ratio.
But what's great about this platform is what you just did, you can play around with some things, right?
Yeah.
Everybody's got their own set of parameters and their own different ideas, and this allows you to see in real time what it's going to look like. I mean, even you and I have differing opinions on, where this thing could be, and if does it make sense to sell the upside call, and are you going out too far on December 20th? And the shorter term makes sense because this trade should work one way or another by the end of the month. Those are all the types of things that you have to sort of go through in your mind to make these kinds of trades, but then you can visually see it with the platform, which I think why it makes it so interesting and why I think we're so excited to be on this platform and be able to use it in real time.
Yeah, no doubt. I mean, I'll just tell you this. This is probably what I do. I do the 172 half. This is this is November 22nd expiration, and I do the 182 half call. That's the call spread there. It cost me $250. You know what I like about that? It's a quarter of the width of the spread. It breaks even at 175. I have gains of up to 7.5, up to 182 and a half there. I like the risk reward of this. It gives me a few weeks to do it. I think we're going to be in a volatile period if there's any reason for this stock to go higher. So that's my trade here, people. It cost me $250. It's a $10 wide. It breaks even at 175. I max gains at 182 and a half. All right.
And we'll put that in the notes, by the way, for people so they can look at that. I mean, it's helpful, but sometimes you got to talk through these things for it to make sense, because when you're looking at it, and this is just something we talk about all the time, when you're an individual looking at these things, you tend to sort of focus in on what you're focused in on. Sometimes it needs another set of eyes to say, hey, Dan, you might want to think about this. And with that other set of eyes, you can have a different set of parameters. We used to call that taking a partner back in the days at Goldman Sachs, but it's true here on the Robinhood platform as well. You can create that type of community where you can have those types of conversations. What am I missing? What do you see? What should I be doing differently?
All right. Well, I appreciate you being my partner. You're a legend, mate. That's what they say over there across the pond. Should we take a few questions before we get out of here?
I got a few. We do. And this is from Steve Z. Thoughts on Bitcoin post-election? Well, it's amazing, and again, you've made comments about Bitcoin. I have as well. It appears as though that run up to 72,000 was anticipation. I think when the Iowa polls came out, is my instinct. Then you saw Bitcoin drop down. I think it got to about 67,000 or so. Is that right? I think we got to about 67.5, and now we're back to 69. I think this is my sense. And again, I'm not playing politics here, but I think if you think former president, now candidate Trump is going to win, I think Bitcoin will take its cue from that. And I think that's what Bitcoin is, in my opinion, is solely trading on right now.
Yeah, and again, this chart is kind of interesting, and you and I have talked about it. That move from the January lows when it was below 40,000 up until 72, right at, these current levels, but that was in March, so that happened in 2 months. That was basically on the creation of a lot of these ETFs after regulators allowed them to happen. And it's interesting because it's basically gone sideways, for the better part of the last 8 or 9 months. And so here we are. That's a pretty long base. And to your point, depending upon the outcome that we get this week, maybe the candidate that's more favorable towards the risk asset, meaning like less likely to regulate the crap out of it, maybe it finally breaks out.
Walmart's a question we get a lot. Chris L's asking, any thoughts on a potential move in Walmart? We've been pretty consistent about Walmart, Chris, and if you've watched our shows, if you've watched Fast Money, we've talked very favorably about it. And today, I think 83.75 or so, another new all-time high. It just seems to grind higher pretty much regardless of any environment right now. Walmart seems to win. And unless you think something differently, I don't see that changing anytime soon. Now, if they come out with a quarter that obviously surprises people to the downside, we've seen these air gaps lower in Walmart. But we haven't seen them for a while. And I'm still of the belief that, Walmart is lower left, upper right here, Dan.
Yeah. So Amanda, let me operate here for a second, because when I look at this one, one of Guy, you have been particularly, bullish on this name, as is Danny Moses on the Tape podcast. And, for me, I'm like, I get it. They've been benefiting from this trade down, and we talked about the consumer. And so, there was a stat earlier this year that we've quoted on a few occasions. The company mentioned that, they basically now have their average customer makes about $100,000 a year. Okay. That's up a lot. So what does it mean? It means that, a higher end consumer is trading down. So the company reports on November 19th. We're going to take a much closer look then. But when I look at this thing and I say to myself, okay, let's just kind of put Walmart here, and I'm just going to click on this thing for a second here and show you what this looks like. I mean, the stock's up, Guy, nearly 60% on the year.
I know.
Okay? And so let's just go to the chart so folks can see that. I know Amanda just had it up. Let me get rid of this Google ticket here. 2 massive gaps. You remarked on their last quarter, they saw an acceleration in e-commerce, up 21% year over year. That's likely to continue through the holiday season. And, sooner or later, though, if you're long this stock, you may want to trim. You're going to want to move your feet one way or another. I'm looking again at the Friday, November 26th expiration, and the stock's trading here at like 83.5 or so. And I'm looking at these kind of 83 puts here. It costs 232. I mean, that seems kind of reasonable, Guy, when you think about, that earnings event. But we'll take a closer look as we get, up to that earnings event. But I think sometimes I like to just kind of see where things are trading in the options market relative to the stock, and getting a look at it, a week or two ahead of earnings.
You get an understanding what the market is pricing in, without question. Last question before we get out of here from John Hutton. Would love to get your thoughts on Newmont Mining. You can throw the question up and the folks at home can read it. I think we have found support. And if Amanda throws up a chart, this 45-ish level that we traded down to me, was prior support a couple times. And if you go back and look on the upside, it was resistance on the way up a few different times. So I look at Newmont here, and we basically traded down to the moving average. I know we got through it. But, this prior resistance on the upside is support. If you go back and look in early August, we had traded down here and bounced. So the overreaction on the back of earnings, in my opinion, was exactly that. I'm a still believer in the gold trade. Newmont's not one of the better miners out there, but it's definitely, obviously, an important gold mining stock. I've liked AEM better, and if you look at that chart, it's a much different looking chart. But I think Newmont itself is enough where you can look at it on the long side here, John.
There you go. I actually that thing looks kind of washed out here, and it seems like, as you say all the time, all roads lead to gold. That would be all roads lead to gold. So it would be nice to see some of the miners play commensurate. All right, Guy, we covered a lot
You
of
know
ground.
what? We have a bunch of NVIDIA questions, so I don't want to leave people hanging. Let's just throw up an NVIDIA chart real quick, because obviously we traded up and through the prior all-time high. I think June 20th, the all-time high was 140 and a quarter or so. We obviously traded as low as, I think, 90 on August 5th. Subsequently, we bounced and made a new all-time high of 144 and change, and now here we are either side of 140. I mean, I think logic suggests that the longer we stay around the prior all-time highs, the more apt we are to make a new leg higher. I believe, Dan, you have it in front of you. They report on November 20th or so. So short of some market event, it feels like NVIDIA is going to do this grind higher, in my opinion.
Well, the pattern that you see right here on the 1 year, Guy, you see these consolidations. You get back up towards that prior high from a few months ago. You get a big gap higher. We're in the same sort of situation right now. It's making that flag. The one thing that again, I've made this point, 3 quarters in a row, or maybe even longer. At some point, they are not going to hit the whisper.
Agreed.
And and then it's like, that'll be a fascinating day in the markets, just to see if everyone heads for the door at the same time. But this is a very constructive looking chart. Make no mistake about it.
Yeah.
But
And I want to be clear. This is important. Like, I'm not bullish NVIDIA here. Like, there are a lot of things that really concern me. We're going to hear from Super Micro, and I don't think the market is fully pricing in any potential sort of connecting of the dots between those companies. But I'm just talking about it on just a technical basis, what it's done and what it's doing now, and what we could potentially do into earnings. But I think there's some tape bombs out there on the NVIDIA front that the market is not pricing in.
I got you, man. We'll take, I'm sure we're going to look at it every day on the
No
market
doubt.
call until November 20th. It's one of the, the questions we get the most. Guy, we covered a lot of ground today. Volapalooza, man. That was it. And, like, you're a legend. I really enjoyed using this platform because I've gotten to know it since we were down at the Robinhood Summit. They released it then. They're rolling it out, people. So be patient. We're really enjoying messing around with it. I know that they're also going to be, adding lots of different features. But right now, it's a great place. You can trade right off of this thing, which I think is pretty cool, right off the charts and any of those sorts of things. You can build tickets like you saw us do. So again, I think it's pretty cool.
And we're going to help people walk through it without question. And it's what I love about it is it's intuitive, and it's a learning tool as well, just to see and understand what the market is looking at, how things are being priced, how you can obviously move out the duration curve, how you could change your strike prices, and what that does. I think it's a great tool, and one that we're excited to be implementing, maybe a few times a week, but definitely once, Dan.
Yeah, no doubt. All right, Guy, we should get out of here. You need to make it into the city for fast money. You and I have a big one there. Excited about that. It's always interesting to see how the market trades around these events. Obviously, again, we started out the show by saying no one has a crystal ball. Oftentimes, the reasons why markets are moving in one way or another is not something that makes a lot of intuitive sense to most people. So we're going to see how this thing shakes out. A big week here.
Big week. Thanks, folks, for joining us. We look forward to seeing you again. Check out the Risk Reversal page on YouTube. Please subscribe. Doesn't cost you anything. And we're back tomorrow, Dan, Nathan.
Yes, we will. See you tomorrow.